Hello guys, welcome back to the next video where we are solving the MCQ questions from the CBSE 2003 board exam paper for accountancy. And in this video, we are going to solve the MCQs from the second set of 67 by 2 by 1. In the previous video, we had solved 67 by 1. All the MCQs, all the 30 MCQs were solved. If you have missed out that video, then do check that out. You'll find the link in the description box below. And if you don't want to miss out any future videos, then hit the subscribe button and the bell icon. Without further ado, let's get started. The first one that we have is a partnership sum where we have Ram and Mohan partners with fixed capitals and their partnership deed allows interest at the rate 10% per annum. Net profit for the year was 30,000. The amount of interest on capital was to be credited to each partner's current account, and how much to be credited, that is to be calculated here. Now, if you see here, the profit amount is given as 30,000, okay, but the interest amount, if you calculate 10% of 3 lakhs, that's 30,000, and 10% of 2 lakhs, that is 20,000. So total interest is 50,000. However, the profit is just 30,000. So that means there is insufficient profit. Okay. And again, look at the word was allowed. Okay, so interest is allowed. Interest is not a charge against profit. In that case, the insufficient profit amount, this will be distributed among the partners in their ratio of interest on capital. Okay, or in other words, in the ratio of their capital. So 3 is to 2 is the ratio of their capital. So 30,000 will be distributed in the ratio 3 is to 2 among both the partners, Ram and Mohan. So 30,000 into 3 by 5 is 18,000 and 2 by 5 is 12,000. So answer C is your answer. Moving on to the next one that we have, Anu, Bindu and Sia are partners in the firm sharing profits and losses in the ratio 2 is to 2 is to 1. Sia was guaranteed that her share of profit would not be less than 50,000. Now, here there is no specific partner who has guaranteed Sia, right? So it is the firm who has given the guarantee. That means any shortfall will be borne by Anu and Bindu in their profit sharing ratio, which is 2 is to 2 or 1 is to 1. That means equally. Now, the firm's profit for the year ended was 2 lakh. The amount of deficiency to be borne by Anu would be how much? So first calculate the share of profit out of 2 lakh, how much Sia is getting. Sia's share is 1/5. 1/5 of 2 lakh is 40,000. So there is a shortfall deficiency of 10,000 that will be borne by Anu and Bindu equally. That means Anu's share will be 5,000. Okay. Let's have a look at the next one. Rohit and Mohit were partners sharing profits and losses in the ratio of 2 is to 1. Their capital accounts had a credit balance 1,09,000 and 66,000. They admitted Sahil as a new partner for 1/5 share. Sahil brought 25,000 as his share of goodwill and he agreed to contribute capital in the new profit sharing ratio. The amount of capital brought by Sahil was how much? Okay, now let's understand here first how much money they already have. So 1,09,000 plus 66,000, that means 1,75,000 they already have as capital. And on top of that, they are getting 25,000 as the premium for goodwill, which is brought in by Sahil. Okay, so total capital for Rohit and Mohit is coming to 2 lakhs, which is representing 4/5 share because 1/5 they are giving to Sahil. So that 2 lakh represents 4/5. So in that case, let's do a unitary method calculation. So if 2 lakhs is for 4/5 share, that means total capital will be 2 lakhs into 5 by 4. Okay, this is simple unitary method. So if 2 lakh represents 4/5 share of capital, then total capital of the firm will be straight away 2 lakh 50,000. Okay, okay. If 2,50,000 is the total capital, then Sahil's capital for 1/5 share will be 1/5 of 2,50,000, which is 50,000. Okay, so that's how this answer is being arrived at. Be careful and you have to be very clear with the concept because again some students forget to add this share of goodwill. Okay, that's why practice is more important so that you can pick them up and do it flawlessly and quickly in the exam. Let's move on to the next one. 3 Roman A. Radha Limited forfeited 500 shares of 10 each, fully called up for non-payment of final call of rupees 3 per share. So if final call is not received, that means the rest 7 rupees they have been received. Okay, so 7 rupees have been received, that means 7 rupees have been forfeited. 300 of these shares were reissued at rupees 8 per share, fully paid up. So now 8 per share fully paid up, that means these are reissued at 2 rupees discount per share. Okay, so you forfeited 7 rupees per share, you give a discount of 2 rupees per share, that means you made a profit of rupees 5 per share. Okay, and on 300 shares, that means you made a profit of 300 into 5, 1500, and that is what they're asking here. The amount credited to capital reserve is how much? That is 1500. Okay, next one, another forfeiture sum. Company forfeited 1000 shares of rupees 10 each, 7 called up for non-payment of first call of rupees 2 per share. Now, out of 7 called up, you haven't received the first call of 2. That means 5 rupees have been received. All of these shares were reissued at rupees 5 per share, rupees 7 paid up. So again, if 7 paid up is there and you are reissuing them at 5, that means you're giving a discount of 2 rupees on reissue. Okay, so 5 you have forfeited, giving a discount of 2 rupees per share. So 3 rupees is the profit per share. Now 3 rupees into 1000 is 3000. That's the amount getting transferred to capital reserve. Okay. Now you have to be very careful and quick with your calculation, and these things can only come up with practice. You have to understand that how the capital reserve amount is being arrived at. Okay, if you find out the profit made per share of reissue, it's easy for you to calculate the amount. Otherwise, you'll end up doing long calculations and end up losing marks and time both. Let's move on to the next one. Suchi and Ruchi were partners in a firm, sharing profits and losses equally. And throughout the year, Ruchi withdrew 12,000 in the middle of each month. Middle of each month is important point to be noted here. And straightforward, this means the average period which is taken for interest on drawings is 6 months. How are we arriving at this? I have made detailed videos on this and you'll find the link in the description box below for the entire playlist. Do check that out because there are different scenarios of calculating interest on drawings under different methods. Okay. On the reconstitution of the firm, the value of the furniture increased from 7 lakh to 8 lakhs. So there is a revaluation profit of 1 lakh here, and the stock reduced to 4 lakh from 4 lakh 20, a revaluation loss of 20,000 here. So what is the gain or loss on revaluation? In that case, 1 lakh is a profit, 20,000 is a loss. So net profit is 80,000. Okay, option A is your answer. Point number 6, total assets of a firm when it was dissolved was 30 lakhs and its total liabilities were 6 lakhs. Assets were realized at 80% and liabilities were settled at 5% less. Dissolution expenses were 30,000. You have to calculate the profit or loss on dissolution. This is one of the ways of doing it. However, you can quickly prepare just 2 columns for yourself so that you're able to write the debit sides and credit sides. So on the debit side, we know the asset value is transferred. Okay, the liability realized 5% less. So the liabilities were sold off at 5 lakh 70,000. Okay, that comes on the debit side, and the realization expenses of 30,000 will come on the debit side. Okay, Now let's quickly do the credit side as well for better understanding. So if you do this total here, how much are you getting? So 30 lakhs and 6 lakhs, it's giving you 36 lakhs. This is the debit total. Okay, just for understanding, if you because what I've seen is students do the realization account. So it's better for them to understand that way, the debit and the credit way. On the credit side, you transfer the liabilities, which is 6 lakhs. Then you write the asset realized amount, which is 80%. So the asset realized value will be 80% of 30 lakhs, which is 24 lakhs. Okay, and do we have anything else? We don't have anything else, so that gives me a total of 30 lakhs on the credit side. Now, very clearly, the credit side is shorter, the debit side is bigger. Relation account being a nominal account, there is a loss of 6 lakhs. Okay, if this was easy for you to understand, then definitely you can do it this way. Moving on to the next one, number 7. Offer of securities or invitation to subscribe to securities to a selected group of persons by a company other than by way of public offer. This is known as private placement of shares. Okay, quick win if you know the answer. A partnership firm has 4 partners. How many additional partners can be admitted to the business? As per the provisions of the Companies Act, again, there should not be Companies Act, it should be Partnership Act. Okay, so however, as per that, there can be maximum of 100 partners, so 96 more can be admitted going by that. Let's move on to the next one. Amit and Sumit were partners in a firm with fixed capitals of 6 lakhs and 4 lakhs. Kavi was admitted as a new partner for 1/5 share in the profit of the firm. Kavi brought 40,000 as his share of goodwill premium and 3 lakhs as his capital. The amount of goodwill premium credited to Sumit will be. Now, the amount of goodwill is credited among the sacrificing partners in their sacrificing ratio. Here, in this question, nothing is mentioned about the old ratio, so we take it equal. And even after the admission, nothing is mentioned about the new ratio or the amount of sacrifice, so we take that as equal as well. So in that case, the 40,000 goodwill premium brought in by the new partner will be distributed equally among both the partners. So Sumit's share will be 20,000 as well. Okay, next one, number 9. Gopal, Krishna, and Govind were partners sharing profits and losses in the ratio 5:4:3. Krishna retired, and Gopal and Govind purchased his share of profit by giving him 1,20,000. So 80,000 was paid by Gopal and 40,000 by Govind. So the gaining ratio will be in the ratio of 80,000 and 40,000 itself. So in that case, the ratio becomes 8:4 or 2:1. All right. Number 10. At the time of forfeiture of shares, capital account is debited with always the called up amount on shares. Remember this. I've seen most of the students sometimes tend to forget this, that the called up amount is only debited to the share capital account during forfeiture. If you remember this, your forfeiture journal will never be wrong. Number 11. Elite Limited issued 20,000 9% debentures of 100 each at a discount of 10%, redeemable at a premium. On the issue of these debentures, loss on issue of debentures account was debited with 4 lakhs. The premium on redemption of debenture is how much? Now, 10% discount on rupees 100 is 10 rupees. 10 rupees into 20,000 is 2 lakh rupees. So that is the discount on issue. Now, loss on issue is 4 lakhs. That means the remaining 2 lakh is nothing but the premium on redemption of debentures. Okay. Net assets minus capital reserve, that is nothing but the purchase consideration. Okay. It's not goodwill, not total assets, not liquid assets, it's just the purchase consideration. When the company issues shares at a premium, the company can collect the securities premium along with any of the following. It can do it either application or allotment or call or any combination of this, so any of the above is the answer. Next one that we have, on admission of a new partner, the old partners share the gain or loss on revaluation of assets and reassessment of liabilities in their old PSR. Okay, so it's not always during admission, even during retirement or death, the existing partners they share the profit or loss on revaluation in their existing profit sharing ratio. Okay, so old PSR is the answer here. Next one, Asha, Nisha or partners and Charu is admitted for 1/4 share. Again, which she acquired equally from Asha and Nisha. Okay, 1/4 equally taken is like 1/8 taken from Asha, 1/8 taken from Nisha. And this is what we are showing here. 3/4 minus 1/8, which is 5/8. 1/4 minus 1/8, which is 1/8. And Charu's share 1/4 means 2/8. So the new PSR becomes 5:1:2. All right. Let's move on to the next question, number 15. We have a case study given here. Based on that, we have 14 and 15. So if you see here in this question, they have given the profit before allowing interest on Shiv's loan, which is 7,6750, and Shiv has given a loan of 75,000. No date is given, but the rate of interest is given, which is 9% per annum. So the interest amount will be 9% of 75,000, that comes to 6,750. And as we know, the interest on loan is an item of PL account that should be subtracted. So if you subtract that, 7 lakh remains, and that is the right amount or the net profit that will be transferred to PL appropriation account. Okay, so 7 lakh is the answer here. What will be the amount of interest and drawings of the partners? Now, again, this is interesting because it requires different concepts. You have end of each quarter, you have beginning of each half year, and you have end of each half year. Okay. Now, when it is end of each quarter, we use the average period 4.5 by 12. If it is beginning of each half year, we use 9 by 12. And if it is end of each half year, we use 3 by 12. Now, how are we arriving at this? Again, refer to the entire playlist on interest on drawings that will help you to understand different scenarios at a concept level, and you will never ever forget how to calculate interest on drawings. It will make your life so easy and concepts so clear. So do check them out. Okay. So if you do this end of each quarter, that means 50,000 into 4 for the entire year into 4.5 by 12 into 12% is 9,000. 50,000 beginning of each half year into 9 by 12 into 12% is 9,000. And 70,000 end of each half year into 2 for the entire year into 3 by 12 into 12% is 4200. So option B is the answer. Next, number 16, under the fluctuating capital method, the balance in the capital account fluctuates from time to time, which is correct. Under the fluctuating capital method, all the adjustments such as the share of profits or loss, interest on capital, drawings, interest on drawings, etc., are recorded directly in the capital accounts of the partners. That is also correct. So option D is your answer. Both are correct, and R is the correct explanation of A. All right. So now let's move on to the part B to solve the remaining MCQs. Question 27 that we have. Which of the following is a tool of analysis of financial statements? It is ratio analysis. We had a similar question in the other paper. The dash ratios are calculated to determine the ability of a business to service its debt in the long run, which is the solvency ratio. That means how much solvent the business is. Will the business be able to pay off the debt in the long run? Okay. The inventory turnover ratio you have to calculate from the given information. You have revenue from operations, you have average inventory given, and you have gross loss given. Okay. So gross loss, that means you have to add the loss to get the cost of goods sold, and the inventory turnover ratio is nothing but cost of goods sold by average inventory, which is 7.2 times. Option C is your answer. 29. Interest of rupees 3,000 received in cash on loans and advances will result in. So Again, interest received on loans and advances, which is cash inflow from investing activities, because loans and advances were given, and on that you are earning interest. Okay, it is like investments made and the company is receiving interest on that. Okay, in case of financial enterprises whose main business is lending and borrowing, interest paid and interest received, this will be operating activities because that is the main operation of that business, where it's lending and borrowing throughout the time. Okay, so that becomes operating. Which of the following transactions will not result in flow of cash? Okay, it will not result in any flow of cash. Your answer will be not option B, it will be option A. Cash withdrawn from bank, because it is just the business money flowing from bank account to cash account. Okay, so this is not resulting in any inflow or outflow of cash. Issue of shares will lead to inflow of cash. Purchase of investments will lead to outflow of cash. Payment of wages will lead to outflow of cash. So just the question is asking will not result in flow of cash, like in any flow of cash. Okay, it's not a result in inflow, result in flow of cash. So don't be confused with the question. There is no flow in option A. So these are the MCQs that we have, the 30 MCQs including the OR questions. If you have any questions, do let me know in the comments box below. We'll be more than happy to help you out. Do share with your friends and hit the like button if this really helped you to understand things at a concept level. We'll be preparing more such videos for you to refer so that you are better prepared for your exam. If you have any questions or any specific video you want me to make, do let me know in the comments box below. Stay tuned for more such videos. Thanks for watching.